What is up, guys? Welcome to our channel. I'm Sanat Kumar from simplefxonline.com. And today, as we all know, guys, is Thanksgiving, and that means today is a bank holiday in the US, which means all of the US dollar pairs is going to be very illiquid, and anyone that messes around with this pair or mistakenly over leverages themselves is likely to experience severe consequences. So, whenever there is a public holiday present, never ever over leverage yourself or go overboard, because that is the perfect storm of opportunity for brokers to move the price around to whichever level they want. And you'll be surprised to know this, guys. You might get affected even if your broker is the sole one to run a hustle on you. So be very careful with days like this, because obviously in the retail side we do not have much control. And coming to the economic calendar itself, there isn't much to talk about, and today is overall a pretty neat and clear day as well. And in another few hours we are not likely to see any kind of actions unless the Sydney session gets back up and running again in another 12 hours or so. And today, guys, as far as today goes, I've just placed only two trades, and the pairs which we are focused in are the Great British Pound Canadian Dollar and the Euro US Dollar. As both of these pairs are real time trades which I've taken, it means that it will be easier for you to follow along only if you understand my perspective, which is exactly what I'm trying to explain in this video, so that you can understand what kind of powerful tool CryptoDroid is, and along with that, you will exactly know how to use the input from that software and take advantage of the data from the economic calendar as well, and create a perfect blend which suits not only your goals and needs but also your lifestyle. So regardless of which time zone you are in, you will be able to take advantage of stuff. By the way, guys, if you are looking for CryptoDroid access link, you can find it in the description section below. And as always, know that it's a free tool. Coming back to the charts itself, guys, on the Great British Pound Canadian Dollar, as you can see on the longer term time frames and time horizons, obviously it is a downtrend, and considering how stretched out the entire moves are, it is a no-brainer that slowly the tides are shifting in the favor of the bears. So this was one zone which recently got broken rapidly, and the second move was also great, which means the second wave which occurred was a massive one. And on the third one, right now we are just experiencing a slight bounce off of the current support levels. But just like I said, guys, if you focus the chart from the top to bottom, you need to understand that each and every single time there was a momentum high being made, the moving averages didn't exactly respect that, because the direction input to it was crystal clear. So we experienced three bounces till date, right? So just focus on the three bounces, guys, and try to correlate it with the chart above. Each and every single time it occurred, just a temporary market top was being created, and the actions were crystal clear, right? But right now, if you focus on the 15-minute chart, we are headed into a very tight consolidation zone, and that is mainly because there is no catalyst driving the events, and that scenario isn't likely to change anytime soon, or unless at least the London session opens tomorrow. So we have got a lot of room to move around both in terms of price and time, because the next significant resistance zone is considerably a long way away from the current price action levels. But you need to understand that there is no guarantee that the price will breach these levels around the 1.6920 mark, which means we don't get to pick the tops in the market. Instead, we just have to keep on stacking the order flows for every 40 or 50 pip one, so that you can dollar cost average your way into a sell order, and then scalp the range between our entry point towards the support zone, which is going to be something around 1.6860 mark. So even at the current price action level, there is more than 30 to 40 pips to be added here. And even though the momentum is already running in a little dry, if we get any kind of aggressive action about the current mark, or any kind of stop loss, and for that matter, it is just going to be an excellent opportunity to stack in more orders and get in on a much better rate. So That is why I'm focused on this trade, and given the conditions today in the market, guys, this is one of the best things you can do, and this pair definitely deserves a spot on your watch list. So a trade like this has at least 1:1 risk reward ratio, and if we get that bounce we are looking for, it is easily going to be 1:2 risk reward ratio setup. The second thing is the crowd favorite, guys, which is the Euro US dollar, and here the conditions are much more ripe. For example, on the 15-minute time frame, as you can see, guys, just like I mentioned, for a long period of time the price has been in a downtrend, and on the 1 hour chart you can clearly see that, right? Like, let me just zoom out a bit so that you can see it better. From year to year, the price has reached the 100-day moving average most of the times, and the 200-day moving average clearly dictates the direction here. So here also, just like I mentioned, just look at all the times wherein the momentum was in the peak zones, and you can easily find the entries. And you don't even have to drill down the entries, guys. Like, you don't have to be very precise about the entries. Instead, what we have to do is just figure out way to stack our orders so that even if the price goes 5 or 10 pips up or below, we will be able to make the most out of the situation. So that is exactly the case here. And from the last noon support zone, which is on the 15-minute time frame, which is roughly here, the price has been moving up, and given the fact that today is a US holiday, Euro is obviously bound to get more stronger, right? Which means right now we are much more likely to see the movement towards the upward direction. But just because we are nearing the trend line, do not be under the impression that the tide has changed, because in reality, the thing that is unfolding right now is very simple to understand. The price is just looking for liquidity, and it is just trying to find that sweet spot which has enough order flow to keep it rotating around a particular price point. And unless that is reached, it is going to continue up. But as soon as that price level touches, it is bound to go down very soon, and that is the most probabilistic scenario. So keep an eye on the momentum, and as it is already running out, in the coming few hours, especially, a big explosive move is bound to occur. So these are the two trades currently I'm invested in right now, and my typical lot size is around 2 standard lots, which means if you want a figure in terms of risk reward ratio, then it means that I'm risking somewhere around $400 to make around 600 bucks. So a decent enough risk reward ratio on a slow day, and given how strong the probabilities are in our favor, I'm pretty confident on this one. And that's a wrap for today, guys. As usual, if you have got any questions or comments, feel free to shoot it down below. Subscribe to our channel to get all the latest trade alerts for free, and if you are interested in day trading, then hit that notification bell as well. See you guys on the next one.